What if one company influenced almost every major corporation on Earth? What if it quietly shaped global markets, governments, and even your retirement savings, without most people ever knowing its name? This isn't a conspiracy theory. This is BlackRock. Managing trillions of dollars, BlackRock is the world's largest asset manager, with a portfolio bigger than the economy of most countries. It doesn't make products or sell to consumers. Yet, it owns a piece of almost everything you see, use, and invest in. In this video, we're going to uncover how BlackRock rose to such immense power, how it controls vast sums of money without actually owning it, its deep-seated influence on governments and corporations, and the hidden power structures behind modern capitalism. Let's dive in. BlackRock was founded in 1988 by Larry Fink and a small group of partners. Their original mission was simple: manage financial risk better than anyone else. Unlike a bank that lends money, or a hedge fund that makes high-risk bets, BlackRock manages money on behalf of others. Its clients include pension funds, governments, insurance companies, central banks, universities, and millions of everyday investors like you and me. BlackRock doesn't own this money. It controls how it moves, and that difference is everything. To understand the scale of BlackRock's power, just look at the numbers. It manages trillions of dollars in assets. That's more than the GDP of Japan or Germany. It's a sum larger than the combined market caps of Apple, Google, and Amazon. Through its countless funds, BlackRock holds significant shares in nearly every major company imaginable: Apple, Microsoft, Amazon, Tesla, major banks, oil giants, and defense contractors. This means BlackRock doesn't just observe the market. It asterisk the market. When it moves, the entire global economy feels the ripples. So how did it achieve this? One of its most powerful tools is the ETF, or Exchange Traded Fund. You've probably heard of them. BlackRock owns iShares, the largest ETF provider in the world. ETFs are incredibly popular because they allow everyday people to invest in entire markets, like the S&P 500 with a single click. Sounds harmless, right? But here's the twist. When millions of us invest in these broad market ETFs, the money funnels into BlackRock's funds. As a result, BlackRock becomes a top shareholder in virtually every company within that index. This passive accumulation of shares gives it immense voting power at shareholder meetings, influence over corporate boards, and long-term control, all while remaining completely in the background. But BlackRock's true power isn't just its money. It's the data. Meet Aladdin, BlackRock's proprietary risk management system. Aladdin stands for Asset, Liability, and Debt and Derivative Investment Network. This supercomputer analyzes market risks, economic trends, and global financial stability with unparalleled precision. It doesn't just manage BlackRock's own assets. It's so powerful that other major financial institutions, central banks, and even governments rely on it. This means BlackRock can often see financial risks forming long before policymakers do. Information is power, and BlackRock has more of it than almost anyone on the planet. This unique position has created a revolving door between BlackRock and government. During financial crises, who do governments turn to for advice? Very often it's BlackRock. After the 2008 financial meltdown, the US government hired BlackRock to help manage the toxic assets from failed banks. During the COVID-19 pandemic, the Federal Reserve again turned to BlackRock to help manage its corporate bond purchasing programs. This raises a critical question. How independent can a government truly be when it relies on the advice and technology of the very company that controls global capital? BlackRock rarely tells companies what to do publicly. Its influence is far more subtle. It steers corporate behavior through its shareholder votes, its guidelines on corporate governance, and its increasing focus on ESG, environmental, social, and governance standards. When BlackRock, as a top shareholder, signals that it wants companies to focus more on climate change or board diversity, CEOs listen. Not because BlackRock is loud, but because it is everywhere. Supporters argue this pushes corporations to be more responsible. Critics warn it gives BlackRock unelected political-style influence to reshape entire industries according to its agenda. Either way, one thing is clear. When BlackRock changes its investment philosophy, the market follows. This isn't democracy. It's financial gravity. So who controls BlackRock? The company is led by its co-founder and CEO, Larry Fink, one of the most powerful figures in global finance. But even BlackRock answers to someone: its own shareholders. And ironically, who are the biggest shareholders of BlackRock? Other giant financial institutions and, you guessed it, their own index funds. This creates a closed loop of financial power, an interconnected web where money controls money, largely hidden from public view. Should we be worried? BlackRock didn't rise to power through force. It rose through efficiency, technology, and by offering a service everyone wanted. Some argue it brings stability to the financial system. Others warn that concentrating so much influence in a single entity is inherently dangerous, regardless of its intentions. The real danger isn't necessarily BlackRock itself, but a system that allows so much power to become concentrated in so few hands. In the end, BlackRock doesn't run the world, but it does help decide where the world's money goes. And in our society, money is power. Understanding BlackRock isn't about promoting fear. It's about fostering awareness. Because the most powerful forces are often the ones you can't see. Thanks for watching. If you found this video insightful, please hit the like button, subscribe, and share it with someone who needs to know. See you in the next one.